even as the banking industry works its way out of the 2008 and 2009 global economic crisis, a few banks, very few banks around the world, are well placed to take advantage of the opportunities coming on stream. And one of those banks is ANZ in Australia, double rated, with a war chest of $2.5 billion just raised in its capital raising exercise, and an opportunity to expand into much of Asia if it wants to. Today I'm speaking to the CEO of ANZ, Mike Smith. Mike, it's good to see you again. And so what does it feel like to be sitting on that war chest?
I wouldn't call it exactly a war chest. I would give it the description of a little bit of flexibility in our capital that we can use opportunistically, or certainly for assets that fit our strategic plan. And as you know, it's our vision to become a super regional bank within 5 years. But the opportunities that are now coming out as a result of the crisis are of course extraordinary, and we would not have foreseen that 18 months ago.
You went to ANZ with all of the experience that you had in HSBC, so you've had the chance to look at a number of the institutions that you're looking at again now as part of HSBC. Tell us, what does it take for a bank to become regional successfully or international successfully today?
I think there are, you could say there are a number of issues. One is that you must be very focused. You must really have your vision very clear with what you're trying to achieve, and you must remain very focused on that vision. But basically, our strategy is based on organic growth, because I always believe that is the best way to grow. The other thing is it's 1 times book, which I've always liked. That's a sort of number I quite like paying.
Okay. That the HSBC culture is still there.
That's sort of quite deeply ingrained.
Okay.
But in a situation where there are opportunities, opportunistic acquisitions, you should always look at them, but they must make sense with your strategy. Whilst you can buy a very cheap bank right now in the US, in fact you could buy one get one free probably.
Right.
It wouldn't fit with our strategy, so I'm not interested in that.
So you go to the table with 1 time book, and then let them talk you up.
Well, basically what you have to do with an acquisition is to work out what incremental benefit it is to you in terms of vis-a-vis your organic approach. So if it puts you 2 or 3 years ahead of where you are now, then there's obviously conceptually a need to pay a premium. But that premium must be the value of the franchise.
Okay, then let's just take a look at the organic franchise that you have right now. You have the highest NPL of the big 4 banks in Australia, which incidentally is very small by the standards of any other country. Can an Australian bank be truly regional, and are all the things out there in Asia, are they worth buying into? So how do you see the criticisms that come to you on your organic franchise and what you have on the ground in Australia?
Well, I think the best way to argue with skeptics and people who are critical is to prove them wrong. And I think that results are everything. The fact that half on half we were 100% up on our Asian business, I think is sort of proof enough that we're getting this right.
Right. But when you're 100% up on the Asian business, a lot of that is wholesale, would you say?
An element, yes, but I mean a lot of our business in Asia is wholesale, but it's making the hub and spoke model really work, which we had not done before. We hadn't really joined up the pieces. But I mean, if you look at the wholesale business, I mean, it was only about 50-50 trading versus customer flow, and it's the customer flow business which is critical. So, I'm very encouraged by the result.
But the Australian industry itself is brutal, because the competition amongst the big 4 is, and you feel the moment you take your eyes off the local market, things happen, market shares shift, and so on. How are you holding out in Australia?
I'm pleased with the way that we're moving in Australia. We've had a lot of remedial work to do on the institutional bank. That's going well. The retail business and consumer business is going extremely well. We have lost market share in a couple of areas, some of the higher risk mortgages and areas, frankly, which I'm prepared to lose market share because, you know, we have to realize that we're going into a downturn in Australia. It's going to get a little tough. And I don't see the point of putting on high-risk loans at this time.
Well, what's the definition of a super regional bank on the balance sheet? 20% regional, 50% regional?
Yeah, I mean, we basically set out for getting 20% of our income from.
And where are you
Asia.
right now?
Well, at the half year we were at 15%. We were up from 7 18 months ago, but that was sustainable income. I think it's more about 12. You know, I would say we're about 12. So we're well on the way. And I said 20% after 5 years. So, you know, I think we'll definitely do that.
Did you look at any specific, possibilities in Asia as part of?
Yes, we have. In the last year, we've looked at a number of banks, a couple in Hong Kong, one or two other small opportunities around, in Indonesia, for example, and we felt that the prices being asked were just unrealistic, and we couldn't make them work. So.
But that's the going rate. I mean, the smaller the franchise.
It was the going rate.
Right.
It's no longer the going rate.
Having said that, much of Asia, the going rate will be anything above 3 times book, 5 times is. There's no shame in asking. What countries are attractive to you at this point in time?
Well, we have 3 main core areas within Asia. That is Greater China, so I include Taiwan and Hong Kong. Indochina, so Vietnam, Laos and Cambodia, where we're actually the largest foreign bank already. And Southeast Asia, which is really Singapore, Indonesian axis. The piece missing is India, and I would like to have a presence in India. We have a large back office operation in India. We employ close to 4,000 people there.
Right.
But we are in the process of having applying for our license, and I hope we will get permission to open a branch. And
in all of these 4 areas, you expect to buy a franchise and then grow it organically?
No, we're already there in these businesses. We're growing it organically. We are focusing very much on the corporate and wholesale business, where that makes sense to really support our customer base in Australia, New Zealand, and Asia. That cross linkage.
Vietnam offered you the chance of getting into a market ahead of most of your peers. Yeah. What have you learned? What are the most important lessons from the Vietnam experience that has become part of your organization? Like you've internalized it in a sense.
Well, I think it's the realization that if you go into an emerging market soon enough and build your brand, it does put you in a very good position for the future. However, you do have to have patience, and I do. I have patience. What I'm trying to achieve is something which is almost dynastic. I mean, I would see the end game here for ANZ is 30 years out. It's not in my tenure. If I can put the foundations in place and maybe a couple of bricks on the first floor, I'll be pleased. But what I want is the company to understand what its vision is, where it needs to go.